What's up guys, and welcome back to the channel. So there was some big news that came out of the recent batch of 13F filings, as Michael Burry sold his entire portfolio in the second quarter of 2022 and added one small new position. In typical Burry fashion, this move follows a bunch of warnings on Twitter about the overall state of the market and why he thinks we still have another big drop in prices to go. So today, I want to share my thoughts on why Burry might have sold his positions by looking at some of his recent tweets and revisiting his investment strategy. So let's get into it. If you watched my previous Michael Burry video, then you already know that it's pretty standard for Burry to frequently change his portfolio in the short term, as that's his investment style. However, it was pretty unusual for Burry to sell his entire portfolio in one go. So let's look at a few reasons why he might have sold. Since the beginning of 2021, Burry's been consistently tweeting about how the overall market, including the crypto market, is egregiously overvalued, fueled by speculation and huge amounts of money printing by the Federal Reserve. In June last year, he tweeted that quite simply, it's the greatest speculative bubble of all time in all things. Fast forward 12 months, and wouldn't you know it, Burry was spot on. As usual, he was just a little bit early.
Watch, it will pay. I may have been early, but I'm not wrong.
It's the same thing. It's the same thing, Mike.
Since those tweets, the Nasdaq fell by around 30%, and popular companies like Shopify and Netflix have seen their stock price crash by up to 80% over the last few months. Even the mighty Bitcoin has seen its price fall 60% from its all-time highs, of 64,000 to 21,000. After a few months of pain, many investors expected Michael Burry to pat himself on the back, say "I told you so," and get on with his life. But according to Burry, the pain might not be over yet. About 2 months ago, which was around the time Burry was unloading his portfolio, he tweeted that the crash we just experienced was simply multiple compression. For those who don't know, just to save you the time of looking it up, multiple compression is when the multiple that investors are willing to pay for a stock decreases, such as the price to earnings ratio or the price to book ratio. And, according to Burry, the next thing that investors are going to have to deal with is earnings compression. Earnings compression is similar to multiple compression, except this time it's the earnings of the company that decrease instead of the multiple. So Burry says we might only be halfway through the crash so far. I think Burry believes earnings for most companies will compress for two reasons. One, because of inflation, and two, because he's anticipating a large recession, which will lead to lower spending and disposable income, which will inevitably lead to lower earnings for businesses. So I think this is one of the reasons why Burry sold his entire portfolio over the last 3 months. He seems pretty confident that the market will keep crashing, which includes the companies that he owned in his portfolio. So it makes sense that he would sell before prices drop even further. One of the quirks of Michael Burry's investment strategy is he can defy the conventional wisdom of Warren Buffett, who says it's unwise trying to time the market, as nobody can predict when the market will crash. That is true. However, Burry's style of investing, which is more of a Bain Graham approach, kind of bypasses this principle. As I explained in my previous video, Burry's investing strategy is buying businesses that are extremely cheap. Quite simply, he likes to buy a bunch of dollar bills for 50 cents, and then sell them for $1, preferably in the quickest time frame possible to achieve the highest returns. So what this means is, best case, he's aiming to hold a stock for only a few months, and worst case, a couple of years, which is an incredibly short holding period compared to investors like Buffett and Munger. Because Burry has such a short holding period for stocks, it kind of makes sense that he would sell even after a big drop in price. With 50-cent dollar investing, any event that causes the 50-cent dollar to take longer to appreciate back up to $1 is not ideal, and it's common to sell those businesses instead of holding them. So I'm assuming that's what Burry was up to. This is a good principle if you follow more of a Graham style approach, and you have short holding periods for companies. But for investors who use more of a Buffett and Munger approach and have very long holding periods, then we just ignore market crashes unless we want to buy more, and we never ever sell our portfolios during corrections. It just goes to show that even though we call both Charlie Munger and Michael Burry value investors, there are stark differences in their approaches to investing with their own respective frameworks and principles. So overall, I think this is the main reason why Burry sold his positions. He's simply expecting the market to continue falling, and to prepare, he closed out all of his positions and now has a big pile of cash ready to deploy. There is potentially one other reason why Burry sold his portfolio, although I think this one is much less likely. It is possible that Burry's clients, or the investors in his fund, want to withdraw their money. You might remember that scene from The Big Short, when some of the investors in Burry's fund started to panic during the crash and wanted to withdraw their capital. It's an unfortunate aspect of running a fund with other people's money that investors can deposit and withdraw funds whenever they want. And it's one of the reasons why both Warren Buffett and Charlie Munger closed down their own funds back in the day. What tends to happen with investors who buy into private funds is, They put money in and take money out at the worst possible times, especially during market crashes. When corrections happen, instead of rushing to invest more capital into the fund, they're rushing to take their money out, which can be frustrating as a fund manager because you're sometimes forced to sell positions you're down in to be able to return the investor's capital. This is a possibility for Burry's fund, but I think it's unlikely, as I imagine the majority of Burry's clients know how strong Burry's track record is, and I assume they know not to react during corrections. So although it is a possibility, I'm leaning more toward the first reason, which is he sold because he thinks the overall market, including his positions, were going to continue falling in price. Now you're probably wondering why Burry didn't sell his portfolio back in 2021 before the market crashed by 30%, because he seemed pretty confident back then that a big crash was coming. The honest answer is I have absolutely no idea. Maybe he thought the crash wouldn't affect his portfolio that much, because he typically invests in cigar butts, or maybe he thought he couldn't time the top, so he patiently waited for the correction to happen before selling. Let me know in the comments below why you think Burry sold his portfolio now, instead of last year before the market crashed. Now there was some other news, other than Burry selling his portfolio, and that is a brand new position called GEO Group, which is now the only company in Burry's portfolio. I'm not gonna lie, when I first saw this I thought holy shit, Burry just went all in on a single stock during what he calls the greatest speculative bubble of all time. But when I looked closer, I realised the holding was only worth like 3 to 3.5 million, which is less than 4% of Burry's total assets under management. So no, unfortunately Burry didn't YOLO into a prison stock after tweeting about the IRS, although that would have been pretty funny. Because GEO Group is only 4% of his portfolio, that means right now, Burry's portfolio is around 96% cash, so I assume he's preparing for the next big drop in prices. So that's an update on Michael Burry's portfolio for Q2 of 2022. If you enjoyed the video, please hit the like button as it really helps the channel grow. And if you watched the video all the way to the end, thank you so much for watching. And if you're still bored, I'll put another video up in the corner that I think you'll find interesting. And as always, this video is not financial advice and I'm not a financial advisor. So please always do your own research before making any investment decisions. So that's it for this video. Thank you so much for watching and I hope to see you guys back in the next one.